What is going on, everybody, and welcome to another weekly update. And what I'd like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. So if that sounds like something you're interested in, consider subscribing, as I do also provide a technical analysis where I go over all the charts, kind of give you what I am looking at. And then I also do provide a pulse of the market. So I give you my daily insights into what's currently going on X at Hemi137. So, with all that being said, let's get right into the weekly recap. This week has been a big week. It's going to start kicking off multiple big weeks as we are heavily starting earnings, which is front running by a lot of industry leaders. Gives us tons of information. They'll continue to flood us with information over the next couple of weeks in hopes that some stuff gets by the general population, as people are unaware and people really just go off of what is currently going on in headline news, and that's what they take it as for uh, you know price value at that. So ultimately understand, to be in any market you need to go a couple levels deep and really kind of get in the weeds with earnings, understand what the agenda is. There's always an agenda that is pushed out by mainstream media, that's pushed out by the administration, by the Fed, until ultimately understand why the market is going the way it's going, and I ultimately understand that as of right now, it's designed to push up, but you need to be prepared and know how much risk you should be putting on the table. And this is why I provide this to essentially dive into some of the weekly events, some earnings, and give you more insight into what's actually going on. As it does hit that utopic view, I've always stated there's two different views. There's essentially the utopic view, control to essentially control the masses, and then ultimately understand that there is another view, another perspective, that is the reality of the situation. So, with that being said, let's go over this past week. We've had a lot going on, like I stated. We've had Powell that had testimony in front of the House and the Senate, and then we also had Core, and we had some earnings on Friday. So let's dive straight in. Fed Powell, Q1 2024 did not support confidence to cut rates. Now, something I've talked about for a couple of weeks, coming in or the beginning of last year. We were expecting that the Fed were going to continue to potentially maybe even start increasing rates, because inflation has been a very much a sticking point, and ultimately understand that what's been going on is we've essentially changed the report to the point where it used to essentially take the average of 2 years. Now it just takes the average of 1 year. Understandably, you want to try to remove the whole 40% of the money supply that's been printed, but you ultimately have to try to help guide the narrative that things are okay when in fact that they're not. When you start looking at the core CPI, you notice that things in the long run, right, over the past 5 years since pre-pandemic, the pandemic has really messed a lot of things up, and so you have to try to uh, calculate out that 40% of the money supply that's been printed. But the problem is you can't just do that automatically. It takes many years for that to happen. But in the meantime, to try to help steer the narrative, you have to try to ease people's minds to believe that things are getting better, and understand that's only incrementing very small. So, being said, cutting rates too late would weaken the economy. U.S. economy is expanding at a solid pace. Again, you have to understand that even though he's saying these statements, there is a narrative he needs to stay with, and that is guiding the markets. And understand that him, essentially, the Treasury, the administration, they're all trying to navigate this so that the essentially the society doesn't panic. Because if you actually understood what is going on, you'd be quite concerned. But people don't care about that. People just want to live their day-to-day lives, not have to worry about all this, but ultimately understand there is a lot of issues, major issues that are occurring. And this is why essentially the rest of the world is turning against the US. They want to get off the US dollar, because the US has essentially weaponized the dollar. And so, with that being said, the labor market conditions have cooled but remain strong. We've talked about the job numbers multiple times. You have to understand that we are losing a lot of full time jobs, and a lot of those are just becoming gig jobs or part time jobs. To be considered full time, you only have to work 32 hours a week. The amount of people that are actually working two full time jobs is at a very historic level. So this is something you need to understand, right? People are working multiple jobs because inflation is still high. If inflation was not still high, then this wouldn't be a big problem. Now, interest rates being at where they're at is about normal, the 7%. But again, understand price gouging is what the Fed is trying to correct. And to be able to stop the price gouging, you have to understand that they have to keep rates high. So it forces people to have to sell a lot of rental properties that they may have. Again, ultimately understand that people hold a lot of their wealth in equity in their homes. And so understand that because of this explosion, because of the pandemic and the shortage in the supply, yes, some houses are still selling for a lot that do sell. But again, the demand is diminishing rapidly and the supply is building rapidly in specific areas. And it's just like inflation, inflation switches from one thing to the next because the consumer has to adjust their spending on what's currently going on. So all the needs, desires, and wants that people may have, you have to understand that all the wants that they have are diminishing because they can't afford it, because basic expenses is getting too high, and a lot of these essentially expenses people are unaware of when they buy a new home. And that's been one of the biggest complaints. People didn't realize that you have home insurance that's been skyrocketing, you have HOA fees that have been skyrocketing, you have a lot of other different things that are skyrocketing to try to compensate, because services has been expanding on this inflation. That's one of the biggest things that have been a big problem. And so ultimately understand, because of the price gouging, essentially car repairs, people aren't selling their cars, they're keeping their cars. So that is blown up. It's been one of the biggest expenses. And then ultimately understand that these inflation reports are revised to remove a lot of these really high ticketed inflation items, which they shouldn't be, because they want to quote unquote say it skews the data. But ultimately that's what matters, because people are only can afford the basic necessities. And so why would you remove that from the report to skew the information in essentially your favor? But the problem is this can backfire. And understand with the labor market, ultimately, that even the Fed has said something about it. Bloomberg has stated something about it. Now, I don't know if this is some new narrative that, okay, let's pretend like, we're trying to help everybody out. You have to understand they're supposed to be transparent, but they're not, because if they can essentially fluff the data which they've always done, this isn't something that is new. There's just been more light shined onto these things. And then understand, when you're in the market, you see this manipulation in the candle movement, and the way banks navigate. It happens all the time. The way the algorithms favor the house always wins. So with that being said, again, Powell is greasing the skids, and he's already talked about, we're not going to hit a 2% target till 2026. So he's already preparing for, okay, if we get price cuts, what may happen is inflation may start running again. And again, he ultimately understands he wants the full quarter. He doesn't just want to start rapidly cutting because of a bad core CPI inflation report. And so with the fact that we did, this core CPI that we had came in at 3.0 versus 30.1. So it's starting to come back down again because they're removing items. So odds of a rate cut in September have skyrocketed 83%. So they're really heavily talking about September being rate cuts. Now, Biden did say there would be a rate cut this year. It would happen. And then you also had Citibank come out last week and talk about a 200-point cut on basis, which I talk about as panic cuts. When it's bigger and larger than 25 points, Citibank said there'll be 200-point cuts. Now, that's not saying it's all going to happen at one time, but when they start panic cutting like that, it's because there's a major issue. That issue is what's going to draw panic and bring new fear to the market, because you are in a recession. To think that you are not, you have to look at all these companies that are getting absolutely obliterated and hammered. Are your big names like your Nikes, your Starbucks, right? Home Depot, Walmart, maybe not so much because they're selling a lot of generic food, which is people are splurging on food because that's the only entertainment they can get. And ultimately understand Netflix, right? Auto sales, all these additional expenses are going way down. You're seeing people, again, this is why there's so much inflation on used cars. maintenance, because that's people are having to spend money on that. They can't afford a new car, they can't afford a new home, they can't afford any of these other things. They don't have the excess cash again. So this is how this reset starts. It takes a very long time. And the jobs report again reflected just a week ago, the 4.1% unemployment is the signs that you are in officially a recession, because of the average and what has been occurring over the past. And again, you have to take into account that all the revisions that have happened, they've happened after the fact. The market doesn't move off of revisions, it moves off the headline number and what the expectation is. So, talking about all that, you still have car inflation sitting at 19.5, which is very high. Transportation is still very good at 9.4. Hospital service inflation is still at 6.9. Car repair inflation has come way down. I don't know if that's been adjusted. Home inflation. So these are coming down, but again, you have to ultimately understand it's very, very little. A lot of this inflation is so small that it's not actually making that big of an impact. And people are still having to, again, work two jobs just to pay for basic necessities, just to provide a roof over their head and provide food for everybody. So, with all that being said, earnings, we had JPM, we had Wells Fargo, and we had Citibank reporting. Again, the biggest narrative being, of course, JPM is the biggest bank by far. There's not even a close second. But understand that JPM, the 22% net ever fell 1.2% because it just failed to impress. You have to understand, once they essentially absorb all these things, yes, the stock will go up, but then understand it's going to get to a point to where the growth isn't so exciting anymore, and so it's going to start falling and correcting. And JPM, or Wells Fargo, sank 6% of the worst earnings drop for net interest income miss. Citibank dropped 1.8% on expenses. Again, these banks are closing branches. What they're not telling you, and understand, you are in a recession when banks have been closing branches. A lot of these big name banks have been closing branches. Also, what came out, and something that's extremely important, is JPM says there's a lot of overdraft fees that is, if this continues, that they're going to essentially pass that expense off to you. So to even have a bank account, you're going to have to pay for your banking account. And so this is the problem. They make all this money, and yet they're still passing that off to the consumer. So the consumer has to eat the cost. The consumer always has to eat the cost. So despite high inflation, now the banks that are holding your money are trying to force you to essentially pay to have a bank account just to house your money. So again, a lot of big problems that are occurring, and nobody wants to talk about these, but they want to talk. This is why there's a left and a right party, because of the fact that, well, let's talk about other topics that don't mean as much, right? And in the grand scheme of things, when you want to talk about our financial situation is extremely bad. And again, understand you're in a debt-based system. You need to understand how it works, especially if you're going to be in the market. You want to just look at charts, that's fine to an extent, but you have to ultimately understand what drives this market and how it moves, and the reasons behind that. So, with that being said, this upcoming week, again, you're not going to see as many big events occurring, because you're getting right in the middle of earnings. Again, the earnings over after this week are going to start getting larger. We're going to have the Super Bowl week for the next 2 weeks. You're going to have a lot of big earnings coming. So this week is going to be important, as you'll start to get more of a taste of a lot of the banks. So you're going to have less bigger events occurring. We do have Powell's speech at 12 p.m. Eastern Standard Time on Monday. So again, unless he's fielding questions that may not have a big impact, but when he is scheduled to speak or to field questions, you need to be aware of when it is. Because if he does take any questions and answers any questions, it can get very slippery very quick, as he holds a lot of weight in his words. And he's well aware of that. That's why he talks very generic about things and tries to walk around questions, because if he gives specifics, the markets will move off of that. Now, Wednesday, we do have the Beige Book as well. That'll give us insight into the next monetary policy. Again, not expecting anything for July, as the next monetary policy is on the 31st, as you can see down here. Again, not expecting September monetary policy, though. We'll get projections on when we're supposed to cut. Everybody's saying September is going to be the cut. That would make sense, since the next one won't be until November. because again, you got elections around the corner as well. So that September will be a big month if we cut. Again, I don't believe they're going to schedule. If they schedule a cut, again, it is more so a political play as opposed to actually anything else. And understand that October, so if you look at the normal cycle, October is normally a really bad month for the market before it really rallies into the back half of the year, and you start getting the Christmas rally to the back half of the year that essentially bleeds into all the way to March. And then from that point, I mean, you have some very quiet periods between there, especially like in Christmas, the market really doesn't do much, but January, February, the market really explodes. So you run up from essentially this whole back half of the year, the market will really run up. And then we'll see how that does play out. But again, ultimately, and then typically March, you have the other down cycle. March and October are some of the worst time periods in the corrections in the market. And so given the schedules and everything that goes on, you need to understand that just the basic cycles and understand those 2 months are really big, and typically your biggest corrections happen during there. So the market tries to play off those two particular periods, and so you have to keep that in mind. But and given the circumstances with over the last, and again, not trying to make this political, but you have to understand that, you know, politics plays big into a lot of these things because of policy and trade, and it affects supply. So ultimately understand that with what's going on with the last debate with Biden and Trump, he did not do great at all. He did horribly bad. And since then, they've been kind of throwing him under the bus. And something I've been talking about a lot lately is they are trying to, that if a market starts to crash, they are planting seeds on what could potentially they can blame. They're not, the Democrats are going to put a new, essentially a greater candidate in there because they know what's about ready to happen. Either one, if it crashes before the election, they can blame it on Biden's mental health. If it crashes after the election and Trump becomes president, well, then they can blame it on Trump. And they've already said, analysis have said that if Trump becomes in office, the market's going to crash. And you have to understand the whole thing, that essentially the icing on the cake here is that the debt ceiling has been removed and pushed off until next year when whoever's president will have to deal with this. But you have to understand that they removed this last year because if they did not, the market would have crashed. But they saved it by essentially removing it. And what they have done, if they buy tons of their own bonds, because again, all these other BRICS nations and all these China and Russia and all the other BRIC nations are trying to get it to the point where they can get off the dollar because the U.S. is weaponizing it against them and making it hard for them to trade with other countries because of having to switch or purchase these items in the dollar. Now they've essentially weaned off the quote unquote the petrol dollar, but you have to understand, again, there's a lot of verbiage around there that actually wasn't a thing, that people still traded in their own currencies for oil. So you just have to understand that. So there was a power for oil, and there's a lot of major, heavily reliance. The whole world economy, the way it works, is a lot of these countries, they need certain resources, so they have no choice but to have to use the US dollar for some particular resources. So that's where the strength comes from. And then you have to understand that there's still a lot of confidence in the US despite everything that's going on. The rest of the world is still very corrupt. And so not to say that, there's a lot of things going on, but you have to understand the way the political game is played. So with that being said, so they have a lot of seeds planted that they could go. And again, they won't essentially pick a new candidate until after. So whoever's going to take this fall on this market crash, because that's where they're going to blame. They need a common enemy essentially to blame against everything. So you even have a lot of essentially, main news outlets the party turning against Biden, because if the market crashes now, then they can blame it on him. And then they can move past that and figure out if Trump does win, then they can figure out how to impeach him or whatever. But again, ultimately understand this is how it plays out. So it doesn't matter your political affiliation. I try to remain neutral on everything and try to look at it for what it is, because you need to look at it for what it is if you want to be able to take advantage of markets and understand how it can affect the market, because of the policies that are in place and on trade and stuff. So So with that being said, next core inflation won't be until the 14th. Again, we are getting into the end game here where things are, it's either make or break in the next 2 or 3 months. And then if we make it past October, I wouldn't expect a big crash until March of next year, February, March of next year at some point. Again, when the new president comes in, they're just going to offload this thing. And then, or if it's the same president, whatever the case is, you have to ultimately understand if it makes it past February or if it makes it again past October, again, this whole thing will collapse around that February time period, March time period when the new or the same Biden remains in office, or if there's a new elected president, they will essentially have to deal with the crash of the market in March of next year. So with that being said, we're going to go ahead and review the Earnings Whispers calendar here for upcoming earnings. There's a lot of earnings. It's easier just to pull it up, and then I can highlight what I like there. Again, the market is not expecting a lot in the general index, and something I talk about every time you get through a lot of the big. This is why they don't hold a lot of big events during times like this, because individual stocks will start pricing in a lot because of their earnings. And we saw JPM last week was up near 7, which I haven't seen before. It's gotten very, very high because JPM hardly moves, and especially for earnings, it was up really high. Again, there's a lot of worry and concern about bank failures is still going on, still very much a thing. Again, they have multiple pools to pull money to try to help bail them out. Charles Schwab, another big bank, again, their amount of assets they have is putting their major underwater, and you have to understand that they don't bring these books to market, so it's not advertised out there unless you're actually looking for it. A lot of these banks are in big trouble, and that's what you don't understand, and they don't want the public to know that, so that's why they steer a narrative so people can live their lives, but ultimately understand there's still a lot of huge major problems that are going on. And Tesla, obviously, they had some great momentum, and then they kind of killed it over the past week, which I'll get more into when we start getting the charts. But they essentially delayed robo taxis about 2 months. Again, I think it'll be much longer than that. So they kind of killed momentum on that. We'll see if that starts taking it down, especially if the market in general starts pricing in a recession. I think it'd be a good time. Tesla could start selling off pretty heavy again, and then we can start making that move for Tesla. Once we do price in a recession, understand when you're pricing a recession, it's going to take multiple months. It might take about 2 months, and for that correction, they've already been talking. A lot of banks have been talking about next March being that 35% correction. Again, you have a lot of money sitting on the sideline because they thought they were going to correct over a year and a half ago, but we did not because of the fact that, again, the debt ceiling was removed to keep this thing afloat and massive spending. Again, you need massive circulation of money to keep this thing propped up, and that's exactly what they've been doing to try to at least push it off to next year in hopes they can. It's not saying that something can't happen between now, especially with rates being high. You get a lot of unemployment, and you hurt the consumer too bad, they will never recover, and that's the thing that the Fed have to pay attention to. Again, if you're burning everybody out and you're essentially taking all their money at this point, that's this way the essential Fed rate tool works. Understand there's either going to be employment or there's going to be low interest rates, and understand how interest rates actually work, right? It's like a teeter totter. Either you have good employment or you have with high interest or low interest rates, or high interest rates and low inflation. So either unemployment or inflation is what you're looking at, and that's essentially the way that tool is gauged. And that's the teeter totter between the two. You either have one or the other. You don't get both. And they try to make it play out like you're getting both, but you're not. It's actually turning way worse. So inflation is coming down. You're defeating inflation, but you're starting to rise the unemployment much faster. And we're seeing this with people skipping meals, with people moving in with their families. There's a lot of data out there that represents all these things, and I've been talking about these things for a while. So with that being said, let's go ahead and dive into the earnings calendar here real quick. Again, we've had some big banks. We're going to start off with some big banks again with Goldman Sachs, BlackRock. Again, we're looking at a lot of the mid to smaller banks, the regional banks, for potential more banks going under. We do have Bank of America on Tuesday, so that's a big one I'm watching there. Morgan Stanley on Tuesday, Charles Schwab on Tuesday, PNC Bank, big concern. we're really worried about here is Charles Schwab. I think is a big one to highlight because they're in some potentially big trouble. Allied Bank has been brought up as well as another big one that could potentially go under. There was talking about potentially losing one of these big banks, and I think it could be that. I'm really highlighting Charles Schwab. Again, they took up TD Ameritrade's exchange, which has been a big exchange that if you are a trader, it's a huge platform that a lot of people like, and they've pretty much gutted it. And I wouldn't be surprised if they go under in some other bank. I wouldn't be surprised if TD Ameritrade essentially gets absorbed by JP Morgan, to be honest, but we'll see what happens there. But nonetheless, we have another big one to highlight here is ASML for chips. Chips are going to be big, especially when you're talking about NVIDIA. You're going to want to start watching ASML and see what happens there, see how well they do. Johnson & Johnson's been getting absolutely obliterated. So, and then again, a lot of regional banks you need to be paying attention to. And then we have Discover, which would be important for credit cards. United for travel will be really important. Again, a lot of these aren't going to make a direct. And a lot of times when I talk about earnings, I only bring up a lot of ones that are going to have like major impact because again, there's going to be so much overwhelming data coming out. But there are ones you need to be paying attention to. And again, if I wanted to just highlight the ones I'm watching, again, obviously the big banks, Goldman Sachs, BlackRock, Charles Schwab, Morgan Stanley, Bank of America, those are important to watch. ASML, it's important to just see how it plays out for potential chip plays, but it's not going to make that big of an impact on the market. So you need to keep in mind with that. Discover, it's not going to make impact in the market, but it'll be interesting to see what the consumer debt is. So Discover would be important to watch. TSM, obviously very big. Semiconductors, you need to know what's going on with that. If they do well, that just means that NVIDIA will do really well. Which again, everybody's expecting this to do well. So if it does do bad, that can have a big play on the market. So TSM will be a big one to watch. Netflix will be big to watch. But the thing is with Netflix, and something we talked about on the last earnings, was they are removing essentially their subscription count from their reports. And it's important to know that because I've stated cheap entertainment comes in Netflix. And that was the good guidance for Netflix, was to understand their subscriber count. If their subscriber count starts dropping dramatically, that means they can't even afford a basic, essentially Netflix subscription. So it gives you a taste of where the consumer is at. When they're looking for cheap entertainment, they start looking for subscriptions, right? Like Netflix or Disney Plus or something like that. And if that starts dropping, that means essentially your consumer is in such bad shape that they can't even afford a subscription service. So it's important to watch that. Domino's have been crazy. If you've been in Domino's, that company is just like Chipotle, have done extremely well in the food industry, and those franchises are very good. So if for some reason they start missing again, it gives you a pulse on the consumer. So there are certain ones you really need to watch and pay attention to that's going to tell you what's actually going on with the consumer. And this is why I always highlight earnings, and it's going to give you more of the truth of what's actually going on to what's being reported all the time. So, and on Friday, we have American Express. Again, it's going to tell you consumer health. That's important to watch. It's not going to make an impact on the market, but it's good to see with the consumer, especially with their debt. Their debt is continuing to climb at a rapid pace. We talk about it all the time and try to hammer it down. This is what's going on, right? The only reason the economy is being propped up because people are either racking up tons of debt on their credit card, which is becoming, their delinquencies are rapidly increasing, or they're going buy now, pay later, which again isn't a hard credit check. So you're not getting the true data. You don't want to see what's actually going on with buy now, pay later. Because right now they're saying like 30%, 40% of the people that are using buy now, pay later are delinquent, or essentially they are essentially filing for bankruptcy so that they get a credit collectors stop calling them. And so these are things you need to pay attention to. This is continuing to get worse and worse. And again, the numbers that you're seeing and being represented are misrepresenting of what's actually happening. And you have to understand this always plays out every decade. It was starting to occur before even the pandemic. So you have to understand that. Now, that being said, again, they will continue to feed a strong narrative out there until they can try to correct the problem. They try to ease your way into it. They try to plant seeds on what the next step is going to be. Again, they give you a couple months in advance, and then it happens again. But the Fed is very reactionary. They aren't going to just start scheduling cuts again, unless it's a political thing. If they start rapidly cutting rates, that is your proof that, hey, yeah, we've messed up. We need to start correcting this, just like they had to increase rates at a rapid pace. Because of the fact that things were in a very bad situation, inflation was running away, and they needed to correct it. And again, inflation hit 9%, obviously much higher than that, than what's actually being reported. That is what was reported. And then ultimately understand it's the same way when it goes down, that again, they've manipulated the report to only show that, it's only 3%. In fact, it's actually much higher than that. If you start pre-pandemic, groceries are still ridiculously 3 or 4 to 5 times what they were just a couple of years ago. And so that is what's chewing up all the excess cash that is, you're seeing that in Starbucks, because they can't afford that extra coffee. They can't afford the fast food. They can't afford all these other things because things are just 10 times the price of what they were just 2 years ago. So with all that being said, if you made this far, I do appreciate you. This one was long. Understand the next couple of week videos are going to be very long because there will be a lot of information to go through. But again, I just try to highlight all the major things that we need to be paying attention to, how that will affect schedule events, and then ultimately understand that we are still waiting for that major event. We're still waiting for the Fed to start rapidly cutting rates is the next thing we've been waiting for a long time. When they start cutting rates, there will be new fear with that, with a recession. Will start being pushed out there. And then that's when the market corrects. We're already starting to see a lot of these things play out in the auto industry. We're starting to see these things play out in the housing. More supply is coming because people can't afford it. No, you're not going to miss out on buying a new home right now because people just aren't in a good condition, and banks aren't willing to lend to people in this environment because it is very, very risky. And understand that it is things are in again very, very bad shape. So with all that being said, again, have a great day. Go ahead and drop a thumbs up, and I'll see you guys on the next one.